I'm Emily Chang, and this is the Best of Bloomberg Technology, where we bring you all our top interviews from this week in tech. Coming up, Goldman's Big Tech Bonanza. We'll hear from Goldman Sachs President and co-COO, David Solomon. Plus, our deep dive on how to get more women in tech. Former Twitter CEO and Chorus co-founder Dick Costolo joins us. And former Uber board member Bill Gurley weighs in on life after Uber since the fall of Travis Kalanick, why he sees a lot of promise ahead. First to our lead and our coverage this week from the Goldman Sachs Technology Conference right here in San Francisco. We will hear from tech heavyweights throughout the hour, including the CEOs of GoPro, Ripple, FireEye, and Bill Gurley of Benchmark. But let's kick it off with David Solomon, Goldman Sachs President and co-COO.
The year has set up in a way that I think it should be very, very constructive, both for M&A activity and for IPO activity. You know, IPO activity started to pick up a little bit toward the end of 2017. We've got a very, very healthy IPO backlog. But we also have an environment, for a variety of reasons, why 2018 should set up to be a pretty active year for strategic M&A in the technology space.
Silicon Valley, there's such a focus on private market valuations. Are they healthy right now or bubbly?
Look, I think private market valuations actually have tightened a little bit over the course of the last 12 to 24 months. There's no question, meaning capital has been a little bit tighter, you know, for private market fundraising. I wouldn't say that valuations are bubbly, but there's no question that in an environment for the last 5 years where growth was sluggish, investors were really looking for a place where there was growth, and Silicon Valley technology was a place where there was a lot of growth. Look, when you look at large cap tech, it's really remarkable what's going on. You look at a company like Amazon, it's growing 30% on $180 billion of revenues. You know, you look at a company like Facebook on $40 billion of revenue, it's growing 40%. And so, you know, these are big companies with large market caps. They're growing very, very quickly, and that obviously creates interest around other businesses that touch or affect that whole technology space.
So by tightening, are you saying valuations are sort of plateauing or going down?
I don't think valuations are going down. As long as growth continues and the trajectory we're on continues, I think there'll be plenty of capital available. Each company is an individual decision, but some of the, let's say, the ebullience around private capital raising has tightened up a little bit.
Lloyd has said the environment right now is actually better for trading. You know, we are seeing a lot of volatility. Do you expect that to keep up, and how do you take advantage of it?
Well, there's no question that the volatility we've seen over the last couple of weeks is a result of what we were talking about with respect to economic growth. If people are seeing signs of wages actually increasing, if people think that there's a chance of some inflation in the economy, and you see these strong growth numbers coming out, that's going to bring volatility back to a more normal environment. So there's no question that volatility spiked a little bit over the course of the last couple of weeks, but remember, it's coming up off of extraordinary lows, and it would be healthy at this point for volatility to be more normalized in the context of a longer market period. So I would expect to see more of a normalization of volatility versus the ultra-low volatility environment we've been in for the last couple of years.
You are advising Qualcomm on a potential takeover by Broadcom. I know you can't speak to the specifics of this, but at $100 billion, do you think that size of a deal will be an outlier, or would be an outlier?
Look, $100 billion is still a very, very large deal by any stretch. You know, one of the things that's interesting, you know, bringing us back to the technology space, is when you look at large cap tech and these companies that have $5 billion plus market caps, they really haven't participated in the M&A consolidation activity at all. They've pretty much grown organically, and they are growing organically. And so is it possible that one of these big companies steps in and wants to enter a space and does something that's very significant in size? Sure, that's possible, but I think by and large, $100 billion is going to continue to be a very big M&A transaction.
Speaking about cryptocurrency, obviously so much curiosity about it. You know, how can Goldman help clients who are interested in cryptocurrency?
Well, we're watching the space, and you know, we're interested too. And when our clients are coming to us saying, "Hey, we want to learn about this," you know, we're learning too. In the moment, you know, we are, you know, clearing, you know, some future product, you know, for some clients. That activity is small. You know, we have no immediate plans to start trading these currencies. And you know, look, there's a lot of hype, there's a lot of activity around this. We're watching the space cautiously and trying to watch and learn like everybody else. We think blockchain, very, very interesting technology, but whether or not cryptocurrencies become a real store of value and how that all evolves, that's something we're going to watch very carefully.
You've been vocal about hiring and promoting women. What specifically are you doing at Goldman Sachs to make that happen? As we know, Silicon Valley has a big problem.
Diversity is hugely important to us at Goldman Sachs. It's hugely important for our business. And for us to be successful with our clients and really excel as a human capital organization, we have to really have a very, very diverse organization. And so for 20 years, we've been working at improving the diversity of our business. One of the things we're very focused on right now is we hire a lot of people every year, particularly out of school young people. And we've been very, very focused on trying to make sure the diversity of that group of people that we hire every year out of school matches the diversity of the world that we're hiring from, whether it's women or it's Black Americans or it's Hispanic Americans. We're looking for opportunities to continue to increase the diversity of our population. And over the course of the last year, we've made real progress. We've brought the diversity of women in our summer class that's going to come in this year up from something in the low 40s up to the higher 40s by really focusing on that entry point in the pipeline. And if you do that, and your entry point in the pipeline where you're hiring a lot of people creates a more diverse population over time, because attrition for men and women is pretty much the same, you should do better at having a broader pool to promote more women through the organization. So we continue to be very focused on that.
That was David Solomon, Goldman Sachs president and co-COO. Well, Apple CEO Tim Cook addressed shareholders Tuesday at the company's annual meeting, and among the issues talked about, a special dividend due to the tax overhaul and a slowdown in the mobile payment space. He also addressed succession plans, saying one of the most important roles as CEO is properly passing the baton to the next leader. Coming up, we talk to the man who used to run Twitter. Dick Costolo joins us to talk gender inequality in tech, Twitter's recent financial turnaround, and more. That's next. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Uber CEO has predicted Amazon-style losses as the company seeks to expand in food delivery, freight, and autonomous cars. CEO Dara Khosrowshahi told the Goldman Sachs Technology Conference that he had joined the company in crisis and that he's seen no lack of surprises. The comments came a day after Uber reported a loss of $4.5 billion for 2017 on net revenues of $7.5 billion. Well, over the last week and more, we have been examining the male-dominated culture in the tech industry. And my next guest is well aware of the problems detailed in my new book, Brotopia, Breaking Up the Boys Club of Silicon Valley. In fact, he has made it his mission to hire as many women as men at his latest company, Chorus. I'd like to welcome former Twitter CEO and Chorus co-founder, Dick Costolo.
I generally tried to keep it 50% men, 50% women at all points and across engineering and the company, because I felt like when you fall behind, and of course, as is common knowledge based on all the gender and diversity studies that come out from all of these companies, Twitter and Pinterest and Facebook, et cetera, once you get behind on things like gender diversity in your engineering team, it just becomes frankly impossible to catch up. You have to start, you've got women engineers who are interviewing at the company. They want to meet other women engineers. There are only so many women engineers. The women engineers end up spending all their time interviewing other engineers. Then they're not writing production code, and promotions come around and they're like, how come you didn't write production code? And that's sort of one trivial example of how hard it is, of many of how hard it is to catch up when you fall behind. And I just decided that the way to deal with that is to start off by not falling behind. Not say, well, give yourself the excuse in the early days of, well, we just have to get the right 7 people in here on day one, and if there's 7 men, we'll catch up later. You don't catch up. So I decided if it was 50-50 early on and always that way on the leadership team and in engineering, et cetera, it would be easier to stay that way, and I think that's proven to be true.
So why don't more CEOs and founders think like you?
I think they just don't think about it. Listen, if you're a first-time founder, you're trying to raise money, you're trying to find product market fit, you're waking up every morning, now I'm responsible for people I've never been responsible for before, and you want to squeeze your head together and cry about all the things you're worried about. And so they don't think about it, or they feel like that's something I can deal with later. I think there's probably a general sense of, well, there's only 30 people in the company now, 40 people, 50 people. Yeah, that's going to be an issue because we're out of whack here right now, but we'll go deal with that later. And the reality is, once you fall way behind, it's almost impossible to catch up. Everything in the organization starts to work to favor the existing imbalance and to keep it going. Not for any nefarious reason, just because that's the way everything in the company is. And so, for example, if you've got 90% men in engineering and 10% women, the way you bring people into the company in engineering is referrals. Well, the junior engineer guys are hanging out with other junior engineer guys, and they know mostly guys, and so that's who gets referred in. So that's what I mean by this sort of, once you fall behind, that imbalance starts to just sort of reinforce itself.
Is there anything in particular, and I know Twitter is not unique in this, as we know, most companies are male dominated, but is there anything in particular that you learned at Twitter where you saw things go the wrong way that could have been better if there had been more equal men and women?
I would frame it differently in that I always felt that that when I had a more diverse group of perspectives on a decision that needed to be made. Look, when you're a leader or a manager, 80% of what you're doing is listening and gathering feedback in order to make the best decisions. And if you've got the broadest possible set of perspectives to make a decision, that's going to be better than having a very, very narrow set of perspectives.
In fact, you can move more quickly, right? Because you don't have to go ask people on the street
to think
of your product.
Think about it, if you've got a leadership team sitting around the table that's 10 guys and your user base is 50% men and 50% women, you're going to have a serious lack of what half of your user base might be thinking about why or how they use the product in a certain way. And one of the benefits of Chorus is we had a team, small though it may be, that matches basically the user base. And so I always thought that was something you should work toward, to have more of those kinds of, less narrow socioeconomic, demographic, gender-based, et cetera, perspectives into any decision that was being made.
And I continued with Dick Costolo and moved on to what else but Twitter. It has been something of a charmed moment for Twitter lately, mainly the company's surprise revenue gain and its first real profit in its latest earnings results. Costolo ran the social media platform from 2010 to 2015, and we got his take.
Jack has been very carefully and thoughtfully, I think, backfilling the ranks of the management team over the past few years since I left in 2015. There was a lot of news about executive departures in 2016, but at the same time, Jack was doing a great job of bringing in people to fill those positions. Leslie Berlin, the CMO from American Express, has done just a world-class job. Ned Siegel, the new CFO, I don't know him personally, but everyone speaks very, very highly of him. And same with folks on the product team and engineering, leadership, et cetera. So I think this is, listen, Anthony is world-class. He's a great human being. He's going to be an extraordinary CEO. I'm really excited for him. But Jack's done a great job of building the bench over there, and Anthony did a great job with Jack of bringing in Ned to keep the financial house in order.
Do you think the turnaround is long-term, or is this just a short-term thing?
Twitter is one of the most important, platforms and mediums in the world. I have every belief and hope, and I'm a, very long shareholder, that it will continue to be an independent company and thrive. One of the many things I adore about Jack is that he is a very calm and patient and thoughtful leader, which is exactly what you want in these sort of over the long course of the future. This is the way we're going to steer this ship and try to build a successful company and not sort of freak out when the market zigs and something changes in the near term. All by way of saying, I think he's sort of the right person to, now that they've got this, the company on a financial trajectory that the market and the internal team like and can work against, he's going to continue to be the right person to lead that company. I love that the folks in the company now really feel like they've got the wind in their sails, and you can see it when you go hang out with folks from the company now. They're more confident, they're happy, they feel like they've got momentum behind them now. So
what do you make of the sale chatter and who could be a likely suitor?
That chatter comes and it did when I was running the company. So it seemed like every couple months there was a story out about someone or other being interested in the company. I'm confident and sure that Jack has them all focused on the things they need to focus on internally. And the beauty of that chatter happening so frequently is I think the people in the company now know well enough to just not pay it any heed and stay focused on what the priorities of the company are.
Big story in Wired magazine this week. Inside Facebook's hellish 2 years. We just spoke earlier about Unilever threatening to pull their advertising from Facebook and Google, calling it a swamp, filled with racism and sexism. Do you think Facebook's loss could be Twitter's gain this year, or is this something that all of these platforms are going to have to reckon with right now, and what will be the consequences?
I think the biggest consequence for Twitter was, to me, in my mind, the statements coming out of Facebook just a couple Fridays ago, I believe, that they were going to sort of rethink the way the newsfeed worked to be much more about social sharing and what your friends are up to, and less about news and publishers and media. If I heard Mark correctly, that to me is a big boon to Twitter. Twitter has sort of always been about that. This is what's happening now in the world, the pulse of the planet, working closely with media companies, publishers, et cetera. So to the extent they can now feel like this is, we're the place for publishers again. We're the source, the single distribution vehicle for them to really work closely with on things like real-time events and what's going on while an event is happening. That's a giant boon to Twitter, both its relationships with content providers and advertisers.
That was Dick Costolo, former Twitter CEO and co-founder of Chorus. And a reminder, Bloomberg LP operates a global breaking news network on Twitter called TikTok. Still ahead, we will hear from Wall Street heavyweight Heather Bellini, who covers Alphabet and Facebook for Goldman Sachs. Her take on performance in 2018 ahead. Plus, later this hour, we will speak with FireEye's CEO and quiz him about the cyber attack that has already plagued the Olympics. This is Bloomberg. The CEO of Salesforce says a movement is coming at Facebook, and it won't be pretty. Speaking at the New York Times New Work Summit, Mark Benioff said that Unilever's recent threat to pull ads from the social media giant is just the start of a growing backlash against Facebook. He also criticized Facebook's decision to dismiss human editors in favor of algorithms, saying, quote, that started the downward spiraling that they're in today. I posed this question to our next guest, widely followed Goldman Sachs tech analyst Heather Bellini. We talked to her at this week's Goldman Sachs Tech Conference, and I asked her just how concerning is Unilever's threat to pull its ads from Facebook.
I think if you are a chief marketing officer, you want to make sure that you're protecting your brand. And so brand safety is top of mind. It's not just for Facebook, but it's also for, I would say, YouTube with Google. It has been experiencing the same type of feedback. I think maybe some of this might be a little bit overdone. I don't think that Facebook and Google are trying to create an environment where this type of backlash is occurring, but I do think they're making a lot of efforts and inroads, whether it's investing in people to try and make sure they're getting rid of this content before it ever comes online, or investing in AI and machine learning to do that. So I think these are platforms that have exploded over a very short period of time. And I think it's kind of an iterative process that I think they're truly focused on.
How much do you think it will impact revenue, though? I mean, do you think it will have a material impact on revenue? So
at the end of the day, you also have to think about the platforms, right? Whether it's Facebook, again, or whether it's Google with YouTube. These are multi-billion user platforms, right? So if you look at daily active users for Facebook, 1.4 billion, there's probably 1.5 billion plus active users on YouTube, if you look at the measurement there. If you're an advertiser, are you going to walk away from that many eyeballs? And you've heard Sheryl Sandberg say many times, like, we could deliver the Super Bowl in terms of reach every day to U.S. advertisers, right? Just domestically focused advertisers. So I think this is kind of a call to action. I think the CMOs of these big, especially the CPG companies, want to see more being done. But I also think Facebook and Google are responding in kind. And again, I think it's an iterative process, but I don't think they can ignore these platforms.
What about the fact that, for the first time, users in the U.S. didn't grow for Facebook last quarter?
Yeah,
Big deal or no?
Well, so they declined, I think it was 700,000, 800,000 users sequentially. The U.S. and Canada are about 187, just under 190 million users. You're at a point where even when we model out, we don't really model a lot of growth, if any, in daily active users for the company, just given the percentage of the population that they're already hitting. So I don't think that should be a big surprise. And if you look at where their growth and usage has been, it has been predominantly outside the U.S. and in a lot of emerging economies. So it wasn't all that surprising to me. What you have to continue to focus on, again, is the value that the advertisers are getting from this platform, despite what they might be saying in back channels, is that they are getting a lot of improved targeting, better targeting than they could get on any other medium. And they are seeing return on investment on these ads continue to go up. So Facebook continues to do things that kind of improves the reach, improves the targeting, and therefore you're seeing ad pricing go up for the company. So it's kind of working the way it should, we feel, at this point.
You also cover Alphabet. You mentioned YouTube. YouTube CEO Susan Wojcicki recently said Facebook should get back to baby pictures. In fact, Facebook has been making algorithmic changes to show more posts from friends and family. But, interesting to see the dichotomy there, and obviously YouTube struggling with its own issues. What do you think the big headwinds are for YouTube?
So, look, they've got the brand safety issue to be aware of as well. We talk to ad partners and agencies a lot, and I would say they're just as concerned about that on YouTube as they are with Facebook or maybe some of the other social media platforms. So I think, again, in partnership with the advertisers and from a measurement perspective, people just want to see the standards continue to move in the right direction. And I think, unfortunately, it's been a sign of the times for the last year or so, kind of how this message has evolved, and these platforms maybe did kind of get, maybe they not that they went off the rails, but I would say the issue has been just from what users have been posting on all of these sites. I think collectively everyone is more focused on it, and you've started to see that change with some of the algorithmic changes again on Facebook, but I think YouTube's focused on it as well.
That was Heather Bellini, analyst at Goldman Sachs. Still ahead, former Uber board member Bill Gurley joins us for an exclusive interview just as the Waymo Uber trial wraps up. Why he's very optimistic about Uber under new leadership. Next. And a reminder, all episodes of Bloomberg Technology are live streaming on Twitter. You can check us out at Technology weekdays, 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg.
Get the edge you need to stay ahead. Subscribe to Bloomberg Business Week and receive 4 bonus issues free. Bloomberg Business Week delivers in-depth reporting and provocative perspectives that take you inside the news each week. Bloomberg's 2,400 journalists worldwide dig deep for stories and insight you can't find anywhere else. Take advantage of this special offer. Order now to get 4 free bonus issues of the only business magazine powered by Bloomberg. Go to businessweekmag.com/TV offer.
Welcome back to the best of Bloomberg Technology. I'm Emily Chang. Bill Gurley has been making headlines in recent days. The former Uber board member helped lead the ouster of Travis Kalanick from leadership. Gurley took the witness stand during the Waymo Uber trial and spoke to us for an exclusive interview just days after from the Goldman Sachs Technology Conference in San Francisco. Bloomberg's Selena Wang joined in, and we got started by asking the Benchmark Capital partner about the state of venture capital. Take a listen.
This is something that's probably been going on gradually for like a 20-year period rather than something that just happened yesterday. If you go back in years, decades ago in the venture industry, there were famous people who were known, like Don Valentine was known for like coming into a boardroom and demanding. The world was more oligopic back then, and that's the issue, right? Hyper competition has made it such that the majority of VC's biggest fear is missing out on the next investment, and so they're afraid to have a reputation as someone who asks too many questions or pushed too hard, and I think it's led to a situation where there's not a lot of stewardship for discipline and results and that kind of thing.
But what can be done about that?
I don't know. I mean, it's a tricky problem because the thing that led us here is this systematic competitive.
Did that happen at Uber?
I didn't bring it up related to that. I think it's something that's when I talk to there's a lot of buy-side investors here who are increasingly reaching down into these private companies, and when they hear that, they're like, oh, that's what we just experienced. Like I think it's a broad-based problem.
And speaking of that environment of competition, we've seen this low interest rate environment fuel a lot of this capital. So how is the rate increase going to impact the VC industry?
Well, the smartest investors in the world tell you macro is impossible, and so I offer that caveat before I offer any commentary on that front. I think it's extremely likely, so high probability, that a lot of the issues that exist today in our industry and a lot of investment categories are due to this excessively low interest rates. Druckenmiller, just who's someone that's made a name in macro investing, says if you give Texas oilmen the ability to drill holes with someone else's money, they'll drill as many as you possibly can. And so low interest rates drive speculation, and there's clearly more money in late stage available to these private companies than ever before. I mean, $500 billion private rounds was unthinkable. And so I don't know what changes it. The smart people would say that inflation's on the come and that's going to cause the Fed to raise. And it may not be a wall we want to actually look over. We'll see.
You mentioned on stage you've talked to Masa. SoftBank, is coming in now with a first look at deals, more money than anyone. Yep. Is that a concern for you? Is it boxing you and other VCs out? Well,
look, I think that one of the things I talk a lot about on stage is that it's a natural part of a company's evolution to eventually go public. And one of the things that I believe strongly that I think is less well understood is that being public actually helps the companies run better. It's an enforced discipline. These people are extremely smart to ask very provocative questions, and you have to be on your A game. I equate it to playing in the NFL versus college. The only risk the biggest risk I see is that if these massive amounts of money, which they're kind of already doing, delay that natural evolution. But here's how I look at it: like it or not, it's a reality. It's a reality we have to adapt to, and so we're spending time figuring out how to co-evolve. And we're always forced to play the game on the field. It's part of the game.
And Uber's financials just came out yesterday, and help us make sense of that huge spread between the GAAP net loss and the adjusted EBITDA. And are those losses ever going to go away? Well,
so one good thing is I switched the board seat with my partner, so I'm not actually involved in those things being distributed. So I'm further away, and I'm super excited about Dara and Barney and Tony and everyone and the things they're accomplishing, like with the Waymo thing. There are some really strong profit drivers, I think, at the high end of the market, some of the other geographies, and you're starting to hear the Uber Eats business is being very, very successful. And so I'm very optimistic. We've got a great new team on board that know how to run profitable companies. It'll take some time. And you are forced to play this game on the field issue, right? Because there's still quite a bit of capital.
We're making that a t-shirt for you,
okay.
Bill. Uber Waymo settled.
Yep.
How do you feel about that, and what does it signify? Now they've avoided this long drawn out public trial. But how do you feel about sort of the new guard, and are you hopeful that there aren't more skeletons in the closet?
Look, I am super excited about where we are now versus where we were, and I think it's very clear clear from London, LATAM, Waymo, like the DAR is starting to build up a track record of having put out these fires and attacked these problems. And so I don't know if there are more, there may be more, but I have a high degree of confidence that our probability of moving through them is way better than it was. And I think he's starting to earn credibility in that role.
And you're an investor in both Benchmark and HackerOne and Uber. Did you know anything about the hack before
I did not.
Dar became CEO?
I did not.
And do you think that this is going to have an impact?
But both Uber and Martin from HackerOne spoke in front of the Senate last week and answered questions and went through all those details.
And on that point, do you think the developments here are going to impact how bug bounty programs are
It's
run?
possible. I think that people want to make sure that the structure and the systems that are set up are being used in the appropriate ways. And I think both Dar's made some comments and Martin's made some comments about if they could do it over again, they would change those. Those become new policies that get built into everyone's program. I still think it is the very, as Sheryl Sandberg has said this, it is the very best way to protect yourself. It is the only offensive solution. Most of the security solutions are defensive, where you're just building a bigger and bigger dam and trying to hold people out. This is the most leveraged way to attack it.
I just wrote a whole book about improving diversity in Silicon Valley.
Yes.
Katrina Lake, one of your founders, we tell her story, and you were one of her investors, and you said yes when a lot of other people said no. You've also hired Sarah Tavel at Benchmark.
Yeah.
What specifically are you doing at Benchmark to get more women on the Benchmark team and to improve diversity at your portfolio?
Well, I think there are a couple of trends that are super helpful in this regard. I think people like you sounding the alarm and raising awareness is super helpful, and what you've done is amazing, and all these people are talking about it, and it heightens people's attention to it. I also think that the other thing we can do is point out the progress a little bit more maybe than we have. If I look at all of our companies in the executive room, it's remarkably different today as a percentage than it was. Even in the boardroom, Katrina's employee base is majority women, executive team's majority women, board. It's an outlier, I know, but like it's a data point, and highlighting that data point can be successful. Just by happenstance, I think, and it relates to the progress that's being made. I sit on 4 boards where the women are founders. Nextdoor, Marco Polo, Katrina, and Heather with Solve Health. So things are happening, and I think it's continued attention from here's the problem, and then continued attention about progress. Because by drawing attention to the progress, you invite more people to try, which is helpful in the overall process.
That was Benchmark Capital partner Bill Gurley and Bloomberg Selena Wang. Well, eBay is betting on AR to ramp up user engagement. The online marketplace will begin rolling out new augmented reality features for shoppers and is exploring a credit program it hopes will encourage sellers to keep money on the platform. eBay had a strong holiday quarter with 170 million buyers and a 10% increase in gross merchandise volume. Coming up, hackers took aim at the Winter Olympics. We sit down with the CEO of one of the firms on the front lines of cybersecurity and take stock of the dangers there. Next, this is Bloomberg. Apron has struggled since it went public in June of last year, but shares jumped the most in 2 months on year-end sales that beat analyst estimates. New CEO Brad Dickerson is also predicting significantly narrower losses this year. However, Blue Apron is bleeding customers. It had nearly 750,000 users at the end of 2017, compared with about 880,000 at the same time a year earlier. Now let's head back to the Goldman Sachs Technology Conference, where we caught up with one of the biggest players in the digital currency market, Brad Garlinghouse, CEO of Ripple. Ripple, of course, has gone up and down with the market. Take a listen.
We've already seen the markets bounce back some. I don't follow it day to day, but the peak of the market, probably mid-January, the total asset class was about over $800 billion. It dropped down to maybe $300 billion, and I think today it's back to 450 or so. Now that's a ton of volatility. My counsel for anyone following these markets is don't follow it day to day. If you believe this is fundamentally a movement that's changing the nature of a new asset class, then I think you should measure that over months and years, not not day to day.
Ripple was doing really well at the end of last year. There's talk about it being the next Bitcoin. Is that like a benchmark for you?
Well, look, I don't think there's going to be one size fits all. I have publicly disclosed that I'm actually personally long Bitcoin. I think Bitcoin increasingly is digital gold, and it's a store of value. But Bitcoin isn't going to solve a payments problem. You know, the time it takes to confirm a Bitcoin transaction on average is about 3 to 4 hours right now, and per transaction, the fees are around $15 per transaction. That's faster than SWIFT, but in contrast, XRP is 1,000 times faster and 1,000 times cheaper. So it's a fraction of a cent to confirm a transaction, and it takes 3 seconds to complete a transaction. So I look at Bitcoin as solving a different problem than what XRP is solving, and I don't think there's going to be one digital asset to rule them all. I think you're going to see multiple players have success in this market, and I think that's how the market's behaving, where you have kind of a little bit of quality rising to the top, and how the overall market caps have been trending.
A lot of the volatility is due to regulation, and presumably there will be more regulation. What are you expecting?
Well, I hope there's more regulation. I think if we want this whole asset class to grow up and mature, of course there should be regulation. And in fact, those that I think combat regulation, I think aren't really thinking about the benefit. The revolution of blockchain is not going to happen from outside the system. It's going to happen from within the system. And governments aren't going to go away, and banks aren't going to go away. And some in the Bitcoin community come from that kind of anarchistic, libertarian view. I think one of the reasons why Ripple has been very successful is because we're working with the system. We count the Bank of England as a customer. The Saudi Arabian Monetary Authority is a customer. So central banks are working with Ripple today. We expect that to continue in the future for sure.
What do you think the regulation should be?
Well, I think the regulation shouldn't change much. And what I mean by that is when you're executing a transaction using Ripple's software, you're going through one regulated financial institution to another regulated financial institution. Your KYC requirements, which stands for Know Your Customer requirements, your AML, anti-money laundering requirements, your BSA, Bank Secrecy Act requirements, that doesn't change because the bank is doing that on both ends. We're just making the plumbing much more efficient, much faster, much cheaper. And so from my point of view, the regulatory dynamics here, we should continue to have regulated financial systems. And when people, I think, are, oh my gosh, the regulatory is going to change, I think, well, XRP isn't circumventing any regulation, so I'm not that too concerned about it.
And what about what's happening in Asia? Does that concern you?
Well, the only thing that concerns me,
there.
I think the only thing that concerns me is that if we throw the baby out with the bathwater, and I think we really have to understand that not all digital assets are the same. We did a op-ed piece written by our chief compliance officer to kind of just talk about some of the differences. And you have some digital assets that are designed for anonymity. They're designed to circumvent regulation. Literally, I saw a founder of a company talking about his digital asset, and he's like, "Yeah, we're for drug dealers and people in tax evasion." Of course, there's going to be enforcement against that. That's crazy to me that he would, in a public setting, say that. Yep. In contrast, XRP is working with central governments. It's working with central banks. It's working within the regulatory framework, and you certainly were embracing the fact there should be regulatory frameworks applied to the digital asset and crypto market.
So you just partnered with Lian.
Lian, that's one of the largest digital wallet payment companies in China.
So what does this mean, and what other partnerships to come?
Well, certainly we think about an interoperable world of all, whether it's banks, Lin Pay, the Paytms of the world, even the PayPals of the world, and we think about how do we enable interoperability and very low friction between them. We're going to continue to work with players across the world. I think if people understand Ripple's value proposition, our pipeline of partners and customers has certainly grown, and I'm excited to come back and keep you posted on those customer announcements. All
right, the year in Bitcoin, cryptocurrency 2018, what are you expecting?
Well, I think despite the volatility, I think you're going to continue to see a lot of bullish behavior.
But the volatility will continue.
The volatility will certainly continue. We're in the adolescent stage of developing a new asset class, and I think you're going to continue to see volatility.
My conversation with Brad Garlinghouse, CEO of Ripple. Now, the Winter Olympics are off to a roaring start, complete with medals and feel-good stories and a cyber attack. The hack caused network communications to fail during the opening ceremonies, and while authorities have yet to name a suspect, it underscores the ever-increasing need for vigilance in the face of future attacks. We sat down with Kevin Mandia, CEO of the cybersecurity firm FireEye, at the Goldman Sachs Technology Conference to talk about the hack and what threats he sees out there.
I've lived through about 4 different waves or phases of cybersecurity, and we're in the 4th. And what I mean by that is right now we have modern nations engaging in cyber operations, and there's just no rules of engagement. Nobody knows what the rules should be. What's off limits? What's fair game? How do you conduct espionage? And we just know espionage goes where the secrets are, and the secrets are on media right now. And also because there's no risk or repercussions to cyber operations, meaning it's hard to figure out who's doing it. A lot of times it's like a gray area. People don't know if they're doing the right or wrong things in cyberspace, but that's kind of the phase we're in right now. We're seeing a lot of attacks from nation states against nation states. You know, I don't think the gloves will come off yet, but there's just different signals being sent.
It's interesting you casting it in this idea of right and wrong, given that there are attacks that are okay.
It depends on perspective, right? I mean, every nation wants to defend itself. Every nation wants to know other nations' secrets. So if you look at geopolitical conditions, there will always be espionage, there will always be some kind of ideological differences. So yeah, I think every nation's developing a modern capability for cyber operations, and we just haven't figured out as a global community how to operate.
So how would you describe threats from Russia versus China versus North Korea and how they have evolved?
Well, they're all different. They're all getting better, right? I mean, as the defenses get better, the offense has to get better.
So break it down for me.
So I will. The Russians are great at this, you know, and they know how to be surreptitious and they know how to commit operations, but they cannot operate at the scale and scope that the Chinese do. The Chinese recently, especially in the United States, have been operating with some rules of engagement. They used to have a broad berth of targeting. They've narrowed the targeting, but they're a little more obvious. They don't do as much counter forensics, but they're often more widespread. North Korea, a little less predictable. They hack for multiple purposes. They hack to make money. They probably hack for espionage purposes, but they also hack to be destructive. And then if you look at other nations, we've even seen Vietnam get on the radar, and we've seen other nations start to do compromises. Iran is getting very big in cyber operations as well. So all of them have a different level of capability, different targeting, and different counter forensics and different fingerprints they leave behind.
Any insights into who's behind the hacks at the Olympic opening ceremony? There's speculation about Russia because they were banned for doping.
You know, from right now, from the information that I've seen, I'm not sure who's behind it. We don't have attribution at FireEye just yet, but that's another example of anytime you do a major event, there's no risk of repercussions to folks who attack it. So you have to do your physical security at these major events, but you also have to do your cybersecurity.
How is cybersecurity spending changing relative to last year, and what is the exposure of FireEye?
I haven't noticed a big change in spend. Right now, I do know if you're hacked and you know it, the impact and consequences seem higher than in the past, and I think it's gone up and to the right over the last decade. It used to be when you're hacked and you know it, it was a business problem, but it's gotten to, you know, to be much larger now. So when you're hacked and you know it, the bottom line, consequences are growing. Therefore, you have more board attention, more CEO attention, and people are making sure that at least they get a good ROI on the spend they have in security.
This is a business that's becoming full of Me Too competitors. Have you seen any market correction from that?
You know, I don't know if I have. I keep looking around. I go to the RSA conference every year, and I can't remember how many companies are there, but it's thousands of companies proclaiming to do cybersecurity, and it feels to me like there's only 10 or 11 ideas. So I question how much or how many companies the market can support, but thousands feels like a little bit too much to me.
That was FireEye CEO Kevin Mandia speaking with us at the Goldman Sachs Technology Conference. Well, after one of the biggest cybersecurity attacks in history last year, Equifax has hired a new head of data security. Jamil Farshid will join the credit reporting company as Chief Information Security Officer and report directly to the CEO. He previously held a similar job at Home Depot. Coming up, GoPro is out of the drone business. So what is next for the extreme adventure camera company? We sit down with GoPro CEO Nick Woodman. This is Bloomberg. And on the latest revolving door at Snap, head of sales Jeff Lucas has announced he is leaving the social media company. Lucas joined Snapchat's parent from Viacom in 2016 and was crucial to building relationships with advertisers. He's the third leading executive to depart the company in the last 4 months. Snap also just lost its head of product in January, its head of engineering in November. Snap says it won't be looking for a replacement for Lucas. The company's ad revenue now depends less on direct sales following a recent shift to automatic bidding. Well, GoPro has recently gotten out of the drone business, but that hasn't dampened CEO and Chairman Nick Woodman's optimism for his adventure camera company. He spoke with Bloomberg's Selena Wang at the Goldman Sachs Technology Conference in an exclusive interview about GoPro's new revenue streams and if his position on a partnership or an acquisition has changed.
My job as CEO of GoPro is to look for opportunities to realize our vision and create as big an opportunity for our investors as possible. And if that's as a standalone independent company, that's terrific. But if we can achieve that more easily and more quickly with a partner, we would jump at the chance to look at that opportunity.
So have any interested suitors reached out yet in terms of an acquisition or partnership?
No comment.
No comment. Well, if you end up changing your mind, do let us know. Now, according to a recent filing, your chief operating officer, CJ Prober, will be leaving the company, and he was someone that was supposed to turn around the business, and your head of corp dev will be leaving as well. So what explains all of this executive turnover?
Well, CJ was a terrific asset to the company, helped us build our software team, and was a part of the team that has been leading us to turn around, and he's done a terrific job, and we thank him for that. But now that GoPro is even more focused in 2018 and moving forward on our camera, app, and cloud businesses, the scope of the job just got smaller, and in addition to becoming more focused with our product line, our management team is becoming more focused. We're a smaller, more focused business, and we've got a great leadership team that's capable of growing GoPro in 2018.
Well, talk to me about your efforts to attract and retain top talent.
Well, it starts with having a big enough vision and opportunity for people to come and grow their careers. GoPro is known as being a very innovative company, and we've been extremely innovative with our products and pioneering a new category and helping people capture and share themselves in new ways. But we also have to continue to innovate as a business and grow our business model in today's world, and that's something that we're starting to do with new programs like subscription. We shared that we're going to be growing the subscription part of our business in 2018 and moving forward, and it's initiatives like this that continue to excite, attract, and retain talent who want to come and help invent new business models and grow GoPro moving forward.
So we learned recently that the drone business will be shutting down, and that was something that investors were really excited about to sort of turn around the business and rejuvenate growth. So what can we expect in 2018 to be new revenue drivers for the business?
We have a lot of opportunity in our core business. To give you an example, we are spending roughly half the advertising dollars right now to sell approximately the same number of cameras we did year over year. So that tells you that GoPro's lineup is selling much more easily, and we see an opportunity to increase our advertising spend to significantly grow our business this year. We'll do that within our OpEx, our operating envelope of sub $400 million. So there's significant opportunity to grow GoPro's business even without our drone business.
That was GoPro Chair and CEO Nick Woodman speaking exclusively to Bloomberg's Selena Wang at the Goldman Sachs Technology Conference. And that does it for this edition of the Best of Bloomberg Technology. We will bring you all the latest in tech throughout the week. You can tune in every day, 5 p.m. in New York, 2 p.m. in San Francisco. And remember, all episodes of Bloomberg Technology are live streaming on Twitter. Check us out at Technology Weekdays. That is all for now. This is Bloomberg.